Most traders don't lose because they lack knowledge. They lose because they think the market should make sense to them. They believe if they analyze enough, predict enough, and learn enough indicators, they will finally win. But the market doesn't reward intelligence. It rewards discipline. Mark Douglas begins with a shocking truth. The market is not against you. Your own mind is. The illusion of control. When traders first enter the market, they believe price movement follows logic. They search for patterns that must work. They think every loss means something went wrong. But the market doesn't know you exist. It doesn't care about your analysis. Every price move is the result of millions of participants acting on different beliefs. Because of this, anything can happen at any time. Most traders can't accept this truth, so they fight reality. Why knowing a strategy is not enough? Many traders have profitable strategies, yet still lose money. Why? Because when real money is on the line, fear causes them to exit too early. Greed makes them hold too long. Hope makes them ignore stop losses. Anger pushes them to revenge trade. The problem is into the strategy. The problem is how the trader reacts emotionally. The pain of loss. The human brain is wired to avoid pain. In trading, pain comes from losses. So traders hesitate before entering, skip valid setups, close trades too early, move stop losses. Each decision feels logical in the moment, but over time, it destroys consistency. Mark Douglas explains, if you can't accept losses emotionally, you can't win consistently. The core problem traders want certainty in an environment that offers none. They want to know, will this trade work? Is this the top? Is this the bottom? But the market only offers probabilities, not guarantees. Until you accept that truth, you will always struggle. The market is not designed to give you confidence. It is designed to test your beliefs. And until you change the way you think, no strategy will ever save you. Professional traders don't try to predict the market. They prepare for it. This is the biggest mental shift Mark Douglas teaches. Trading is a probability game, not a prediction game. What anything can happen really means, when Douglas says anything can happen, he doesn't mean the market is random chaos. He means every trade outcome is uncertain. Even a perfect setup can fail. Even a bad setup can win. Once you accept this, fear loses its power. The casino mindset. Casinos don't care about individual outcomes. They know that over many trades, probabilities work in their favor. Traders must think the same way. One trade means nothing. 10 trades mean little. A series of trades executed consistently is what matters. Why most traders break their rules? Traders break rules because they want to avoid pain. They want to feel right. They want a certainty. But consistency requires emotional neutrality. Douglas explains that confidence doesn't come from winning. It comes from trusting your process. The 5 fundamental truths. Mark Douglas introduces 5 truths every trader must accept. 1. Anything can happen. 2. You don't need to know what will happen next to make money. 3. There is a random distribution between wins and losses. 4. An edge means higher probability, not certainty. 5. Every moment in the market is unique. These truths free traders from fear. Discipline versus willpower. Discipline is not forcing yourself to follow rules. True discipline happens when breaking rules no longer makes sense. Once you accept risk fully, hesitation disappears. When you stop trying to be right, you finally give yourself a chance to be profitable. Consistency is not about winning more trades. It's about thinking differently. Every trade has risk. Professionals accept it before entering. If you're afraid to lose, you are already compromised. Douglas teaches that accepting risk removes emotional attachment. An edge is nothing magical. It's simply a strategy with a positive expectancy applied consistently with controlled risk. But the real edge is your mindset. True trading confidence is quiet. It doesn't chase. It doesn't force trades. It doesn't panic. It follows rules even after losses. Douglas explains that beliefs create behavior. To become consistent, replace fear with acceptance, replace prediction with probability, replace hope with execution. The market doesn't need to change. Your strategy doesn't need to be perfect. You need to think like a trader who belongs in uncertainty. The moment you accept that losses are part of the game, you stop fighting the market, and when you stop fighting, you finally begin to trade in the zone.